I'm Keon, a research analyst with Lipper. I'm here to speak to you about fund flow activity for the week ended Wednesday, June 10th. Overall, we saw net aggregate outflows of $7.5 billion last week. This aggregate data includes both ETFs and mutual funds. The group with the highest amount of outflows last week was money markets, which saw $7.2 billion leave their coffers. Taxable bond funds followed close behind with $2.6 billion in outflows. Muni funds saw $412 million leave, while equity funds was the only group to take in money last week with $2.8 billion overall in net inflows. Let's move on and take a quick look at last week's market activity now. The S&P 500 and the Dow Jones Industrial Average both rallied on the last trading day of the week to reduce their weekly losses to just 0.4%. The rally on the last day came on news out of Europe as Greece, Germany, and France all agreed to sit down at the negotiating table to try to intensify efforts to save Greece from default. News out of Greece drove the markets down earlier in the week when they announced that they would not be making the 4 originally scheduled debt repayments during June. Instead, they were going to make just one lump sum payment at the end of the month. Let's move on to our macro mutual fund groups now. Take a look at the fund flow activity there. For the week, equity mutual funds had net inflows of $850 million. Taxable bond funds saw $653 million leave. Muni bond funds, just over $400 million in outflows. And again, money market funds, the main driver there with $7.2 billion in outflows. Let's take a closer look at our equity mutual fund group now. Last week's inflows were the first weekly inflows after 6 straight consecutive outflows. Once again, we saw that non-domestic equity funds led the charge among the inflows as they took in $1.6 billion, while domestic equity funds had approximately $800 million in outflows. We've noticed through the year that domestic equity funds, we've been seeing a lot of outflows from that group when we look at our weekly data. So we took a closer look at it. And overall for the year, they're down approximately $30 billion. And looking at the trend going back over time, we see that domestic equity funds have only had positive net inflows in 1 year since the global financial crisis of 2008. That year was 2013. Conversely, non-domestic equity funds have had positive inflows almost every year except for 1 during the same time period. So we can see the trend there is continuing in 2015. In this year's activity for domestic equity funds, large cap growth and large cap core funds are the main contributors to the outflows. Large cap core has seen $18 billion leave their coffers, while large cap growth has seen $18 billion leave. Let's take a closer look at the equity ETF group now. Last week they took in $2 billion. There was a 3rd consecutive week of inflows. Some of the main players, the SPDR S&P 500 ETF took in over $800 million. The financial select sector SPDR had over $530 million in inflows. On the sell side, we see the iShares US real estate had about $420 million leave. Moving on now to the taxable bond group. Let's start with the funds, the mutual funds. Overall, as stated previously, they had about $650 million in outflows. This broke 4 consecutive weeks of net inflows for the group. The main contributor here was funds in the high yield category, which saw just over $800 million leave. And as we move on to the ETF, taxable bond ETF and Muni Bond Fund, we'll see that high yield was a main culprit for each of them for outflows. All right, let's move on to ETFs now, taxable bond ETFs. Overall, for the week, the group saw $2 billion leave. It's the 3rd consecutive week of outflows, and as stated previously, high yield were the main culprits for the outflows here. The iShares iBoxx high yield corporate bonds saw $1.1 billion in net outflows, while the SPDR Barclays high yield bond ETF had about $760 million leave. On the buy side for taxable bond ETFs, we see the iShares Core US Ag took in about $230 million. Let's take a closer look at our Muni Bond Group now. Overall, just over $400 million in net outflows for the week. There's 6th consecutive week of outflows. And as stated earlier, we saw the high yield muni bond classification contributing the most to the outflows with $239 million. Okay, let's move on to our last group now, money market funds. And continuing the trend for money market funds, 1 week up and 1 week down, we see $7.2 billion in net outflows last week. The main contributor to the outflows were the institutional money market funds, which had $5.5 billion leave. Overall, for the year to date, money market funds have seen $117 billion in net outflows. Well, that wraps up this week's report. If you'd like to take a closer look at the data, please join us at our website, www.lipperusfundflows.com. And please join us here again next week where another analyst will be speaking to you about that week's fund flows activity.